Now, Ms. Miller, please proceed.
Good morning, Chairman Harkin, Ranking Member Enzi, and distinguished members of the committee. For the record, my name is Teresa Miller, and I'm the administrator of the Oregon Insurance Division of the Department of Consumer and Business Services. And I'm honored to be here today and appreciate the opportunity to talk to you about how federal grants available through the Affordable Care Act are improving our health insurance rate review process in Oregon. Oregon has worked very hard over the last 4 years to strengthen our state rate review law and open our process. Because of these efforts, Oregon's rate review process is one of the most transparent in the country and is supported by a strong rate review statute. As we've continued to improve our process, the federal rate review grants have allowed us to hire the staff necessary to conduct more in-depth reviews of rate filings and have provided the funds necessary to solicit meaningful public comments. In my written testimony, I've included more detail about the key features of our rate review process, but just briefly, those include posting all documents contained in a rate filing in their entirety upon submission on our website, emailing policyholders who signed up to be notified of rate filings, opening a 30-day public comment period, and issuing a plain language summary of our decision, and then emailing policyholders with a link to that decision. I want to focus my remarks this morning on the improvements that we've made to our process with federal grant dollars. First, the funding that we've received as part of the Cycle 1 rate review grant allowed us to solicit more detailed and meaningful public comments. I mentioned that we have a 30-day public comment period. Initially, that public comment period attracted few comments, and those who did comment generally simply said that they couldn't afford their rising premiums. But they didn't address the statutory factors that we review as we review rate filings. So this is why we used $100,000 of our Cycle 1 grant to contract with a consumer advocacy group to weigh in on behalf of consumers. This group used the funding we provided to hire an actuary and has been providing very detailed analyses focused on the factors contained in our statute. Unlike many states, Oregon has a competitive health insurance market. We have 7 Oregon-based insurers who actively compete in the small group and individual markets that we regulate. Because of our competitive process, we review approximately 40 rate requests a year in these markets. The first round of federal grants enabled us to add an actuary to our staff, and we're proposing to add another actuary in our next grant cycle. This will allow us to dig even deeper in rate filings, to address issues brought up by the consumer advocacy group, and to hold public hearings so that those who want to watch or participate in our process can see the scrutiny firsthand that we provide with regard to these rate requests. Federal grant dollars have also allowed us to communicate better with consumers about rate filings. We created a new web page devoted to health insurance rates with a search engine that allows consumers to more easily find a rate filing, as well as information about how we review health insurance rate filings. We use grant dollars to create a 7-minute animated story about health insurance costs that breaks down the premium dollar and describes how we review health insurance rates. We also used federal dollars to conduct a public hearing on a recent filing. So how have consumers benefited from the improvements that we've made? Aside from the transparency efforts that help educate consumers about what's driving health insurance costs and give them opportunities to weigh in on requests, the changes that we've made have saved consumers money. In the year that followed the strengthening of our state's rate review law, we lowered insurance company requests 50% of the time, saving consumers more than $25 million, or just under $10 per person on a monthly insurance premium. Of course, that doesn't solve the affordability of health insurance, but every percentage point of a rate request matters to us because it matters to consumers. At the same time, we understand that we must control health care costs to stabilize insurance rates. That brings me to the study that we're conducting with first-year grant funds. Ultimately, the key to stabilizing health insurance costs is controlling medical costs. In Oregon, considering all insurance markets, an average of 89 cents of every premium dollar goes to pay health care costs. To try to tackle health care costs, we used $150,000 to contract with an actuarial firm for a study. The study, which will wrap up in the fall, is exploring whether there are opportunities within our current rate review process to control the growth of health care costs or improve the health care delivery system. As I mentioned earlier, we're applying for a second round of grant money to hire another health actuary and to allow us to conduct public hearings for most of our rate requests. In conducting a public hearing on a recent rate filing, it became clear that even with one of the most open processes in the country, consumers are unaware of the scrutiny we apply to rate filings. I am proud of the work that we do, and I want Oregonians to see the rigor of our reviews. The federal grant funding available through the Affordable Care Act is helping states improve their review of health insurance rates. It is giving states like Oregon the resources needed to solicit detailed and meaningful consumer input, conduct more in-depth reviews of rate filings to prevent excessive increases, and improve rate filing information available to consumers. In Oregon, the next frontier in rate review is finding ways to help lower medical costs so that we can make insurance more affordable for consumers. Thank you for the opportunity to share Oregon's experience and for the funding that enables us to strive for continued improvement. I'd be happy to answer any questions.
Thank you very much, Ms. Miller. Ms. Miller, I'll start with you. I was reading your testimony last night, and you're talking about what you did to use, you used $100,000 to make a contract with a consumer advocacy group to weigh on behalf of consumers. The Oregon State Public Interest Research Group, as you said, keeps us on our toes and reminds us of the questions consumers want answered. You also made a contract with an actuarial firm also. Quite frankly, I don't know of any other insurance commissioner in the entire country that would do something like that. I applaud you for that. But not many insurance commissioners want to contract with a consumer advocacy group like the PIRGs, who usually are a thorn in your side. But I compliment you for that because I think, as you mentioned, that gives you input from consumers and what they want. So I think that you have shown some great leadership there. One of the other things you mentioned, that you're looking at different ideas on how you can affect health care costs. And you mentioned in your testimony, you said, one idea we are exploring is to deny rate requests if the insurer reimburses providers for specified medical errors that should never happen. I find that very intriguing. How can you flesh that out a little bit more for me?
Mr. Chairman, thank you for the question. It really gets down to the contracts that insurers enter into with providers. And when I reach out and talk to the insurers in Oregon, one of the things I heard for years was that they have a difficult time negotiating with providers, particularly hospitals, and getting all the provisions in the contract that they would like to see in the contract. And they raised this as a specific issue and said, we would really like to include a provision in our contract with hospitals that essentially says, if a never event happens, if you amputate the wrong arm, if something happens that we can all agree should never happen, who should bear the brunt of that expense? Should policyholders pay it? Should it come out of the provider? And what I heard from our carriers is that they had a very difficult time getting providers to agree to those sorts of provisions. I understand that today it's more common for those provisions to be included in contracts, but that's one of the ways, again, we're studying this because I don't know exactly how we get at these underlying costs, but I think as state regulators we may have an interesting opportunity to get at these costs. And so trying to look at, can we influence that insurer-provider contracting process? That might be an interesting place to look. So I hope that's helpful.
That's very helpful. I also, are you looking at things like readmission rates, for example, in hospitals? Now, we know there are some hospitals in this country that are doing a great job in keeping their readmission rates extremely low. Other hospitals don't. But then when you have all these readmission rates time and time again, who bears it? Should policyholders bear that?
Right.
Or not? So I hope you're also looking at readmission rates too, since you're looking at the never should happen events.
Mr. Chairman, part of what we asked the actuary who's looking into this and performing the study is, let's look at everything. I don't want anything to be off the table, because if there's a way for us to address healthcare costs and make a dent in those costs, I think we want to do it. So I think everything's on the table for that study.
Well, I compliment you for what you've done. I think you've set a very high standard for insurance commissioners around the country.
Thank you.
Ms. Miller, congratulations on hiring an actuarial firm. Only thing better is an accounting firm. But so I assume that the actuary was used to determine the rate that you allow Regions to pursue. Regions Company.
Senator Enzi, just to be clear, we have actuaries on staff that do the review of our rate filings. The study that I mentioned, we hired an actuarial firm to conduct that study, which is really a separate study from our rate review process, just to clarify. So we have actuaries on staff. We added an additional actuary to deal with workload issues with the federal grant funds, in addition to hiring the actuarial firm.
Okay.
If that makes sense.
Well, concentrating a little bit here on the Regions Company. If they're selling a product for less than what the people pay, that wouldn't be a sustainable business model. So if their costs are higher than the actuarial charts apparently say, how long do you think Regions will be able to take in less premiums than they pay providers in their medical claims? Do you have an adjustment for that?
Senator Enzi, when we consider surplus and an insurer's overall profitability as part of the rate filing process, we do so very carefully, and we understand that long-term products need to be priced appropriately. So with that said, in the Regions case, we reduced the initial request, which was a 22.1% request, to a 12.8% increase. And there were additional concerns that caused us to have them potentially dip into their surplus. The company's enrollment in their individual plans has been a concern for us and was actually a concern pointed to by the consumer advocacy group. Their plans have dropped from enrollment of about 100,000 members in 2007 to less than 60,000 members today. So the key concern here was that if we had approved a 22.1% increase, that would result in further enrollment losses. Typically, your healthiest people are leaving, and that would drive up claims, resulting in future, even higher increases down the road. So part of what we were trying to do in the Regions case by potentially having them dip into surplus was to try to stem those enrollment losses.
Okay, thank you.
It was just this spring or a couple months ago in June, Ms. Miller, that you hosted this public testimony on the rate increase, and I believe that was the first public testimony on a rate increase in 20 years. Were you required to do that by the law, or did you just decide this would be an interesting experiment?
Senator Merkley, this was the first time in about 20 years that we conducted a public hearing on a rate filing. We, of course, have had the public comment period so people could comment for a couple of years, but this was the first public hearing, and we were not required by law to do that.
So if I recall right, you were a little skeptical about how that would unfold, and how did it unfold? Was it valuable?
Senator Merkley, I have to say it was... I didn't know what to expect going into the hearing. I didn't know if consumers would find the experience helpful or valuable, and I didn't know how the company would react to it. And I have to say, I found it to be, and I think everyone who attended found it to be a very valuable experience. I heard from consumers that they so appreciated the opportunity to be heard and to come testify and make their views known and have somebody listen to them. We also had a lot of comments about the way we structured the hearing. We had the company present the rate filing. I asked the company about 10 questions, and then we had the consumer advocacy group that we contract with present their thoughts on the filing, and then we took comments from the public. And we got comments from people as they were leaving. They left comment cards and whatnot that said things like, I have a lot more confidence in the work that the Oregon Insurance Division does, having witnessed this hearing. That meant a lot to me, because I know behind closed doors that we are doing an excellent job of scrutinizing rate filings. But if people don't have the opportunity to see that, they don't necessarily know that, and they don't have the confidence in our process that I certainly do and have for years. So I think it was a very valuable experience, and the company, I think, also found it to be a valuable experience.
So, well, I think it's just absolutely terrific. And part of this process was to create a plain language strategy so the public could actually understand the documents before them. Can you just share a little bit about that?
Senator Merkley, I will tell you that over the last 3 years that I've been at the department, I think our single greatest challenge has been to try to find a way to take what otherwise is a very technical process that historically has been actuaries speaking to actuaries, our department actuary speaking to the company actuary, to try to take that process and turn it into something that you and I can understand and the public can understand has been one of our biggest challenges. And it's why we did take some of our grant funding, as I mentioned, and created the animated story of the health insurance premium. We've tried to do everything we can to make this more easily understandable. We spend a lot of time and staff time developing our plain language decision summaries because we want people, that's our way of holding ourselves accountable, but we want people to understand why their rates are going up and why we approve the rate we approve. So,
could you bring that expertise to bear on our legislative language? I want to switch to the health insurance exchange. You've set up a public corporation, the Health Insurance Exchange Corporation, and are hard at work designing the elements of that. And how's that going?
In terms of the developing the exchange, I will tell you, Rocky King is the, I think his title is administrator or interim executive director, whatever it is. And I will tell you, they are just starting to do things like try to find office locations. Some of the things they're doing right now are very basic in terms of setting up a corporation. So I would say it's a little bit slow only because there are things that we don't necessarily think of that, that they've had to focus on, like finding buildings, figuring out where their office is going to be located, getting workers' comp coverage for their employees.
So in general, the vision of the exchange, which is to have all the policies in kind of one computer site where a consumer can compare them to see what features would best fit their family and so forth, is that resonating? Is there a lot of interest in that, a lot of support for it, or do people see that as unnecessary?
Well, Senator Merkley, I think especially in a market like Oregon, if you go to healthcare.gov now and you look at all of your options, the last time I did it for an individual like myself, I think there were 77 options that came up. And sometimes I think too many options is difficult for consumers in terms of figuring out which is the best plan for them. So I think the exchange, I think particularly in Oregon, I think there's a lot of excitement because it'll make it easier for people to compare plans. We have so many options today, but they're not necessarily plans that are easy to compare.
Good. So I just have one last request. My colleague from Minnesota likes to point out that Oregon has a medical loss ratio of only 89%, while Minnesota is at 90%. Can you do something about that so that I don't have to continue to hear this?
Senator Merkley, we will work on that.
Thank you very much. Thank you, Chair.
It's 91% in Minnesota.